How to analyze the market using price action with the break and retest of the trend line. All right. Usually I do a top-down analysis. All right. So what I usually do, I identify my key levels on the daily time frame. So as you can see, we have a support here, and our most recent resistance is at this level right here, and this is a daily time frame. All right. Now, what I usually do, I go over to the 4-hour time frame to identify the key levels on the H4 as well. Very important. If you notice, we have a support area here. We have a double support, one support here, another here. We have resistance in this area as well. All right. And even if you look all the way to the left, you will see that we have resistance here and here as well. So this is a strong level. Price breakthrough, we push up into this support area. All right. You notice this candle reject the area. This bearish candle right here failed to break the high of the previous. Close back below this level right here. All right, and currently we are pushing up with this candle. So looking at this now, we identify our resistance. If price breaks and close above here, there's a high probability we might continue to push up because we have a clean H4 candle right here. And the idea is to always mirror clean movement. But with the trend line strategy, for me, it's a bit different. All right. So what I'm looking at now, basically, if you look at here on the 1 hour time frame, we have support here, support here. We have another support here, and this is resistance. The price actually break, farm support above, potential buy, but this area is messy. All right. But the thing with the trend line strategy, all right, guys, very effective. I use a trend line as a guide of trend. So once price start to break it, I know that there's a possible change of trend in the market. All right. So what I usually do, take for example now, we're in an uptrend. All right. One touch, two touch all the way out. If price actually breaks and close outside of this trend line, what I wait for is for price to create a new low, pull back to retest the area, whether I want to form resistance or price wicked into the area. Usually I would take a sell for price to continue bearish. All right. Now this is my trend line on the 30-minute, and this is also what I'm looking at right now is, if price can actually break and retest this area, we can have potential sell for the market to continue pushing down. Because as you can see, we came up, we created this high, and we are rejecting this area. All right, and then price push down, create a low, we pull back, we're still not closing above here. So let's see if price will actually push down to create a new low, then pull back to actually retest the area. Now, if price pull back and wicked into this area, then I will have a potential sell. But if price breaks and close above here, then I would close 50% of the position. So just wait to see how the market forms. As I can see, we start to push down. Sometime with the trend line strategy, you will have play like these where, price just break and close and push all the way down and you miss the entire move. All right, but I love to wait for that retest with rejection, and that would actually be my confirmation to take a sell. Let's see if price will retest the area. And what I'm also seeing right now is this. All right. But based on the level I'm looking at, I still think that sell is valid if we can retest this area. All right, I still think that sell is valid. So let's just wait and see. So one touch, two, all the way down. And as I can see, price is respecting the trend line. All right, but the thing is, I try to stick with my analysis, my bias, and I just work with what I see and know and understand in the FX market. All right, so let's see. All right, so as you can see, we are coming up to the level. All right, so pretty much usually when price pull back to retest the level, then I would enter a sell. All right, usually I would enter a sell. So we are risking 1% of a $50,000 account. Our stop loss is 15 pips. Our take profit is 30 pips. All right, so this risk to reward ratio is 2 to 1 basically. So we enter a sell. So let's see how price will actually react in. All right, so as you can see, price drop. All right, but once price breaks and close above here, I'm gonna close 50% of the position because you want to manage risk. And the idea is to really, you know, stay impatient as it relates to drawdown in the FX market. So if price close above here, then I'm gonna close 50%. If price start, break this wick right here and possibly here, then still can close 50% and just leave the rest to run basically. So let's see how the market push. So the good thing is that we farm resistance at resistance. So let's see if the market will continue to push in our favor. All right, and I think at this point we can actually move stop to entry. All right, so break even is when you move your stop loss to entry or into, you can move it into profit as well. I'm just gonna leave it to see how price actually farm. But this is a very effective trading strategy that I use for Euro USD and Euro GBP. Very effective. So at this point the trade is risk free. Alright. And as you can see, we hit full TP and price is still pushing towards the downside. Alright guys. So very effective trading strategy, and look at that. All right, so this is how I actually trade Euro USD and Euro GBP. All right, and as you can see, we are still going. This is a nice move, simple but effective. Wow, very effective trading strategy. All right, now the thing with Forex, you have to be patient, wait on your setup to farm, and once you see price print the way you want it to, then you can go ahead and execute your trade. That's the most important thing. And also risk management. Learn to be impatient, withdraw down. If you can identify the trade is no longer valid, the trade start to go against you. Close 50% of the position, close 60%. And just leave a small position to run, because if it hit TP, then you would have made back the position you close, and at the same time you would have made some profit. All right, that's very important. And if you risk 1 to 2% of your account, what are the probability you're going to lose 50 trade back to back if you can wait and set up that as a 70 to 80% probability of playing out? Very unlikely. So person need to be patient and disciplined and just wait on the type of setup that you know and recognize in the FX market, and you just go ahead and execute and you set up and manage risk accordingly. So that's the most important thing. But this trading strategy is very